Hello, everyone. Today, I would like to present to you a quick overview about the first quarter 2024 results of JOST Werke SE. After very strong demand and markets in the years 2022 and 23 in transport, we saw for the first time in 2024 a normalization of demand in Europe and in North America, both for trucks and trailers, especially compared to a very strong Q1 of 2023, which was also positive influenced by pent-up demand for OEMs specifically. For this reason, given the cyclicality in the market, Q1 and our sales in Europe in the first quarter went down by 8% compared to the very strong prior year, although they were actually positively influenced by roughly 19 million euros M&A that were apported by the acquisitions that we did in the third quarter of last year. If we adjust for that organically, the sales declined by 18% year on year compared with a very strong Q1 2023. Despite this, we managed to keep the margins on a very high level in Europe, with margins going down only by 0.5 percentage points compared to very strong last year. And this is, of course, due to the fact that headquarter costs are, for the most part, allocated to Europe, so that the flexibility here is a bit less strong as in other regions. In North America, which is a market that is typically characterized by very sharp up and downs demands in the cycle, we already saw a decline in Q1 of around 28%. However, given the very strong flexibility of the business, as well as a very good aftermarket share, and as well as efficiency measures and cost control measures that we've already put into place at the end of last year and anticipating the normalization of demand in the year 2024, we managed to even increase the margins by 0.5 percentage points from 10.5% last year to 11% in the first quarter of this year. The very good markets with development we saw, however, in Asia Pacific, Africa. Here, the Chinese market, which had been a struggle in the past, continues to recover, giving support to both the truck and trailer demand as well, and also the other countries in the region, specifically India, South Africa, and the Pacific region, continue to have a very strong demand on a high level, despite a quite high comparable basis in the prior year. Here we saw growth of 5% organically year on year, and the region was affected more by X effect, and the margin continued to be very high at almost 21% compared to prior year. The slight decline that you see has to do with the recovery of the Chinese market, which typically has more on-road business, which comes as a lower margin than the off-road business we see specifically in the other countries in the region. So what does that mean for the group overall? The first quarter, we managed to achieve 299 million euros in revenues. Reported sales also were 12% down compared to prior year, organically almost 18% down. We had the contributions from our M&As of roughly 21 million euros, as why organic sales are slightly sharper decline than reported sales. And we saw, as I mentioned, the cyclicality of the transport markets, as was already anticipated, coming into place. And the agricultural markets continue to be quite low compared also to a rather okay prior year, Q1 2021. Overall, however, despite this decline in sales, JOST managed to keep the profitability at a very high level of 11.6%, the same as last year. And the adjusted EBIT came up at 35 million euros, very strong, supported both by the resilient aftermarket business, but also by the share of agriculture that continues to come at higher margins than the transport business. So overall, very strong flexibility, efficiency measures to control costs allowed us to maintain the very high adjusted EBIT margin. Also, we'd like to point out that our ROCE came up at 20.7%, very strong shareholder value creation in the first quarter, and we managed to decrease leverage further down to 0.93 times adjusted EBITDA. Free cash flow was also a highlight in the quarter, more than doubling compared to the first quarter of the prior year to 35 million euros. Free cash flow compared to adjusted net income of 1.4, one of the highest cash conversion rates we've had, and a very good within, well beyond this threshold of 1 time that we are targeted. Adjusted EPS came at €1.70, and adjusted net earnings to sales ratio remained very high, also at 8.5%. Even this very strong start in the year, we have confirmed our guidance. We see, as we mentioned before, single-digit decline in sales given the market situation. We expect adjusted EBIT to decline in line with sales also by a single-digit percentage range. The adjusted EBIT margin should remain, however, in our strategic corridor of 10 to 11.5%. And given the very good start we've had in the year, we are now targeting the upper half of that corridor regarding the adjusted EBIT margin. CapEx in the typical around 2.5 to 2.9%, and also working capital should be below the 19% ratio. So that's the first quarter of JOST in a nutshell. If you want to learn more about it, please check our website, or you can always reach out to Investor Relations.